enacted had some flaws in it. The Dodd-Frank Act attempted to correct some of those flaws, providing more authority and responsibility to the appraisal subcommittee.
And it's scaring the wits out of appraisers, and I think it is affecting values. Appraisers are way more hesitant to say, hey, no, this value is not supported. It's not supported in the market. And instead, they might just say, yeah, okay, rubber stamp it. And then that transaction, that rubber stamped appraisal, and that transaction then becomes a data point in someone else's appraisal 2 weeks later, or a month later, or 6 months later.
Welcome back to Real Estate Mindset. Today's video is going to be absolutely bonkers, and today we're going to have a critical update on how the industry is actually intimidating appraisers to meet value and prosecuting potentially appraisers that are not overvaluing properties. Today we'll go over bombshell testimony from an expert named Jeremy Baguette. Now, Jeremy is an author of several different books on appraisals and what happened in 2008. If you guys want more information on Jeremy, his information is going to be linked in my description. You guys can go to Twitter and find him at @JBaguette. Jeremy is an expert writer about land use, agriculture, finance, and the regulatory state, with a focus on exposing waste, abuse, and misconduct. Not only is he going to explain how the industry wants to cancel appraisers, he's also going to help tie in what's going on behind the scenes with the central appraisal districts and how that fraud has really put every single taxpayer on the hook, especially when it comes to HUD, Fannie Mae, and Freddie Mac. Either way, this video should be full of overwhelming value, and I hope you enjoy. Jeremy, just for the viewers, I already kind of teed you up. I want to get straight into it. I want to talk about the specific problem. Now, obviously, appraisals were kind of supposed to be America's safeguard to prevent another bubble from happening in the housing market. Now, after talking to you and looking at your books, looking at your body of work, your blogs, come to find out, it appears now that the system has actually set up appraisers to unintentionally make mistakes. In other words, the system is intimidating appraisers to overvalue houses. Where I'm from, and I've looked up law, you don't have to quote it, you can't unduly influence an appraiser. It's actually a felony. I used to teach this very thing. So what's going on right now is crazy. I want you to talk about, why you think, appraisers are getting intimidated, and also why we need appraisers to stay in the system. Can you start there, Jeremy?
Okay, so why are appraisers getting intimidated? This is fairly ironic. Funding from the Inflation Reduction Act has made HUD, the U.S. Housing and Urban Development Department, flush with cash, and their mission is to root out discrimination. So even if there's not enough discrimination, they have to find discrimination, and they've created a fictional narrative, something called appraiser bias, and this is a narrative that involves the idea that appraisers are purposely coming in low on houses that are owned by different homeowners of different protected classes. And the problem with that is no appraiser has ever heard of this problem. Appraisers know that when bad actors are discovered in our ranks, they're almost invariably they are inflating values, and those would be appraisers that are involved in federally backed mortgage transactions. This is probably not a whole lot different from, let's say, physicians who are doing work for Medicare, fabricating different medical services that they're doing and then charging the government. So this is similar. And our profession roots these people out when we find appraisers that are inflating values. They usually go before their state boards eventually, and they are hopefully drummed out of the profession.
Right. So, Jeremy,
yeah, go ahead.
Just to clarify, you're from what you said, and I didn't know this, you're kind of like maybe a little bit of a sheriff, actually. You root out bad appraisers. If they're racist or if there's any bias, you get them out of the industry, full arm of the law.
This problem with racist appraisers is something that the appraisal community has never seen before. And it's this has all the hallmarks of a problem that's been focus grouped and it's being stage managed in an effort to essentially intimidate appraisers into serving as rubber stamps. And there are many groups within the housing lobby that have an inherent interest in having appraisers out of the picture. There have been efforts to delegitimize appraisers, to sideline them, to Freddie and Fannie to create something called hybrid appraisals, in which the appraiser is kept from viewing the property that he or she appraises. They are turning to AVMs that are, one feels, not a whole lot more reliable than the ones that were used that led up to the 2007-2008 financial crisis, used by Fitch, Moody's, Standard & Poor.
And Jeremy, but what I was trying to explain to the viewers and take us back here is the industry, HUD, whoever these agencies are, you said appraisal bias, but really appraisal bias is overvaluing houses and putting people in jeopardy. But this appraisal bias that the industry is trying to create is saying you're biased if the values are coming in too low. Is that right, Jeremy?
That is correct. And perpetuating that narrative, it's a phantom issue. No appraiser prior to, let's say, 2019 ever heard of this problem. It's a phantom issue. It's a boogeyman that's been created as a very convenient way of supporting this campaign. I would say instigated most likely by the housing lobby, which are home builders, realtors, non-bank lenders, and fintechs. They see appraisers, particularly human appraisers, as a hurdle. There have been efforts in the past. This is why this rings familiar to appraisers. Is there have been efforts in the past to sideline appraisers, eliminate appraisals, to try to switch to gimmickry and wizardry in the form of automated valuation models. But unfortunately, that has not worked. Appraisers are a tried and true, disinterested, dispassionate force that keeps a lid on housing inflation. And we have to be able to, for the whole concept of the appraisal to work, appraisers have to have a safe space in which occasionally to decide, no, there is no support for this value that a commissioned broker for the seller has come up with, along with the commissioned broker for the buyer. And remember, and I know you're probably going to ask me about this later in the interview, but there is this hidden third party in every, I would say most every home mortgage transaction, I would say most every home sale, and that is the U.S. taxpayer, because something like 75 to 85% of all mortgages are either purchased or guaranteed by Freddie and Fannie.
And I'll get us there. But, I wanted to ask you just real quick, how long have you been an appraiser? Was it 10, 20 years?
So about 20 years I've been appraising.
20 years. Okay. Now, do you think, Jeremy, I'm going to be honest, man, I've been fighting appraisers for a long time. I actually made a Texas CE certified TREC course on how to battle appraisals, which is basically just teaching realtors how to provide good comps, right? Just what is a comp and what is a good comp versus bad comp. And honestly, man, I've run into a situation, Jeremy, I'm just being honest with you, where I've rebutted appraisals legally. There's a legal way to do that. And I've overturned some of these appraisal values $20,000, $30,000. So in my head, I was always like, it frustrated me. And I was always like, maybe we don't need appraisers. Maybe we should go to automated. And until I met you. And then you kind of helped me understand that the more that we go to automated, the more fraud and corruption can exist. So can you explain to the viewers, Jeremy, why we need appraisers, human appraisers?
Okay, well, I would say a very entertaining way to illustrate this is from the movie The Big Short. Go watch that movie and pay attention to the scene in which the representative from one of the big credit rating agencies explains to the protagonists in the movie why these the values that their automated systems have come up with on the loan level are a fraud. Essentially, it's one of the agreed upon causes of the 2007-2008 financial crisis was or I should say were these algorithms that were developed by Fitch, Moody, and Standard & Poor to rate the underlying loan level contents of these mortgage-backed securities and collateral debt obligations. And these were essentially purchased by widows and orphans and pension funds. And a lot of these pension funds have a requirement that they hold only investment grade instruments. And one of the things that triggered the 2007-2008 crisis was when Moody's, Standard & Poor's, and Fitch came out and re-rated all of these mortgage-backed securities that they had previously rated. And it went from investment grade down to junk quality investments, and that triggered the erosion in confidence in these credit rating agencies. And it turned out they all had developed algorithms, but that those algorithms are really only as good as the knowledge of these quants and computer scientists working with maybe some appraisers, trying to capture all of these different coefficients that play into why someone buys a home. And there are many aspects that are very subjective. A lot of them have to do with the design, the floor plan of a property. Some have to do with the styling of a property. Some have to do with view. There are many. I would call them in some cases sentimental, emotional aspects that just can't be captured. But that appraisers who work in an area, they know that, hey, the Cape Cod design is way more popular among prospective buyers than the colonial design, or something like that, or that wow, the format of this floor plan where you have to go through the kitchen to get to a bedroom. The market is not going to like that. That can't be quantified automatically.
Yeah, like it's I used to call that, Jeremy, like unique characteristics, like a bay view or something along those lines. Now, I wanted to ask you, on top of the intimidation of appraisal bias, on top of potential prosecution if appraisals come in low, and other than those things, other than the automated appraisals, why else did prices go so high in such a short amount of time? You've been in the industry as long as I have. This was not supposed to happen again. Appraisals were supposed to be that safeguard, no more bubbles. But can you just go into like the appraisal gaps, Jeremy, and how bad that was, the fear of missing out, the bidding wars? And then can you explain, is there a way out of this that's not painful?
Well, I think one big factor, a hidden factor behind what's going on with housing inflation is the fact that that a low value, a value that is not sufficient to allow the closing of a single family residence for a federally backed mortgage is enough to trigger a complaint to HUD. And HUD has been collecting these complaints, encouraging them, partnering with nonprofits to essentially recruit plaintiffs and complainants. And there are as few as 300, but as possibly as many as 1,000 investigations going on at HUD for appraiser bias. And HUD is not good about responding to Freedom of Information Act requests. I've been on the end of that. I've been trying to get documents from HUD, and others I know. Other journalists have also been very frustrated, and essentially you would have to wage a legal battle with HUD to get some of the documents that are being requested. But all it takes is a few. These cases are being essentially publicized by there are a handful of attorneys that that focus on defending appraisers, and they have every interest in painting a scary scenario to appraisers. So if there are new complaints being filed by a new federal agency, the Consumer Financial Protection Bureau, which is also, from what I know, investigating appraisers, HUD, it doesn't take long it's for the entire appraiser community to learn about it. And that has a chilling effect. It essentially is taking away this protected safe space for appraisers to occasionally conclude a value that is not sufficient to make a deal work. And this sends buyer and seller and their representatives back to the negotiating table. In some cases, it may torpedo the deal.
Yeah, and
that's
they get
the whole purpose of the appraiser. That's the purpose, is to you have this third party, dispassionate person, and
uninterested.
that's
Yes,
a key function.
And Jeremy, I'm going to just say, man, you are 100% right. I've seen that happen as being in the industry. If an appraiser comes in low, or rather it does an accurate value and it doesn't meet the overvalued negotiation purchase price, they freak out. They absolutely they try to tear up the appraisers. Most of them don't even know what a comp is, the realtors, I mind you. And so, it's just, hey, can you explain to the viewers, how much does an appraiser even make in that transaction?
Well, I don't personally do residential work anymore, but I have done residential work. For many years, I did residential work for
Is it thousands?
Mortgage lending. And no,
like
it's way less than that. And it's there's been a intermediary introduced into the equation, and they're called appraisal management companies. And they quickly have learned to work both sides against the middle. And they are being accused of bilking their clients, which are the banks and the non-bank lenders, and then also appraisers, and making huge commissions off each essentially serving as brokers of the appraisal.
Right. I mean, in other words, there's not a huge financial incentive for an appraiser to be an appraiser anymore. I mean, they're getting beat up. They're barely making any money. Now, I just want to go back, and then we'll go into the AMCs. Are you saying that you believe that the way the system is set up, essentially bullying safe appraisers, do you think that setup is stronger as far as the value increase than all of the FUMO, the fear of missing out, the appraisal gaps and bidding wars? Do you think the bigger issue is the system?
Yes, I don't know. I don't have any numbers, but I sense that it is a huge influence, and it's behind the scenes. And it's let's see, Phil Crawford, a podcaster, an appraiser out of Ohio, characterizes what happens as a result as data cancer. That one inflated sale, for example, even if it's slightly inflated, will create a derivative effect. Whereas, because appraisers, if we're looking at 5 sales, half of which have been inflated by an appraiser who was unwilling to come in at a value that would almost certainly draw a HUD complaint, or with fear of drawing a HUD complaint, that appraiser essentially has rubber stamped the appraisal, and then that serves as a data point for future appraisals. And the term data cancer is a perfect quick metaphor for what's going on.
Yeah, I mean, you're saying, and my viewers understand this, most of them, Jeremy, because one bad comp can infect the entire subdivision. 2, 3 comps, even under market or over market, can greatly manipulate it. So you get a subdivision full of 100 houses, only 10 of those houses sold the last 4 years. every other house is now, the value is raised up, especially from the taxing standpoint. Now, I want to ask you this question. Through the Dodd-Frank Wall Street Reform and Consumer Protection Act, one of the consumer safeguards that was put into place was something called an AMC, which stands for Appraisal Management Company, or I'm sorry, yeah, Appraisal Management Company. This was designed so industry professionals like loan officers couldn't just call an appraiser and say, hey, I need this value. If you don't get it, I'm going to call HUD and report you for financial bias. Okay, so the appraisal management companies are supposed to be the segue of communication, so you can see if anyone's violating the law. But what I'm trying to explain to people, Jeremy, is that's kind of BS, because the lenders themselves can own the AMCs and go golfing with the appraisers on the weekend. Do you think that AMCs are the answer? And do you believe that there's financial bias in these AMCs?
All right, with the AMCs, first of all, this is not my bailiwick. Someone like Josh Tucker, an appraiser, a chief appraiser at a bank in Texas, and Lori Noble, an appraiser in West Virginia, have done extensive research into the effect that AMCs have had on appraised values and the aging out of appraisers and so forth. But they will tell you that what started as a good idea, a buffer or a firewall, let's call it, between the client who may be prone to badger appraisers and the appraiser, this appraisal management company, was a good idea. And actually, it was just naive in the way it was executed, and the wording of the bill was naive. And what it did is it created this middleman that has, by doing what you would expect it to do, getting away with increasing its pound of flesh, its piece of the pie, testing to see how much it could get away with paying appraisers through endless requests for bids, and also how much it could bilk banks or non-bank lenders or fintechs, whoever its clients are. So, I mean, it's capitalism. I mean, you created this entity. With some flaws in the wording that created the entity and that legitimized this entity, and the entity is doing what you would expect. It's probing, and they've come today to essentially act as brokers of appraisal services.
Yeah. I mean, it's pretty disappointing, because, you know, when you see, and I've seen a lot of appraisers in the field, they work hard, man. I mean, a lot of working hours and hours. And when we did the math, Mitch and I, it was like they're making less than minimum wage. And so that, you know, from what I can tell, man, I mean, the system is broke, maybe a little less broke, or actually maybe it's even broker, because there's this, you know, illusion of legitimacy that is tricking us. But really, this whole thing is fraud. The people, the agencies are bullying these appraisers. If I go in low, then you're going to say that I'm biased. Like, holy moly. And you know that this is so emotional, Jeremy, like residential, when that deal doesn't work out, they're yelling out loan officers and appraisers every single time. And so if I want to segue now into, really, I think that a lot of your body of work is here. Now, Mitch Vexler and I have been trying to explain to the viewers and expose, you know, what's going on with the central appraisal districts. Now, you and I were talking about the front end or fee appraisals, or like the real appraisals, right? Can you go into now what's going on with the central appraisal district? And Jeremy, can you please confirm that they are supposed to follow USPAP, which is the Uniform Standard of Professional Appraisal Practices? Okay, so that's like the law, how they're coming up with value. Can you explain that, how there's in the policies, the no enforcement, the standards, the codes? Can you go into how corrupt, how much worse it is on the CAD level, brother?
Okay, so Mitch knows a lot more about the problems here than I do, but here's what I can tell you is that there's a mechanism in the state of Texas and other states and at the federal level to incorporate by reference, an outside copyrighted, privately owned set of standards for enforcement purposes. So if the state of Texas, for example, wants to recognize, let's say, a specific version of a fire code that's owned by a private company, it can do that. It can't regurgitate all of the text of the code because that would be a copyright infringement. But it can say, "Hey guys, hey general contractors in the state of Texas, if you want to build a public building, you have to follow this fire code in your design, and also in the fire sensors and alarms and standpipes and things like that have to comply with the terms of this private code." And it will name the code by addition, and there are safeguards in the state of Texas and in other states as well that are laid out in a statute in the state of Texas called the Administrative Procedure Act. And in that statute, it says, hey, you can do this. It allows, there's a way to do it, but there are safeguards, and that keeps essentially a rogue agency in the state of Texas from simply outsourcing its responsibilities. It also keeps the legislature from outsourcing its responsibilities, from saying, hey, we're not going to bother legislating and coming up with new laws or amending current laws. And we're going to defer to this outside organization that wrote the fire code, and whatever they decide, that's what we'll enforce. And we won't, we'll just whatever is called, the National Fire Code or something, and we're just going to automatically defer to them, and everyone will be happy. And so that's kind of that's illegal to do that. That's illegal. There are safeguards, and those safeguards are enumerated in this Administrative Procedure Act. And so this has happened with this other private code called the Uniform Standards of Professional Appraisal Practice. You almost had it right, Travis. You almost got it right. But anyway, that's been in violation of the state constitution. This little rogue agency called the Texas Appraiser and Licensing and Certification Board.
Okay.
This little rogue Texas Appraiser Licensing and Certification Board, this little rogue agency in the state of Texas, does not bother. It can't be bothered to put each version of this private code which it wishes to enforce through a required notice and comment rulemaking, which includes all kinds of things. They have to promulgate that they want to adopt the new version, for example, the 2024 version, for example, in the Texas Register. That's the state-run newspaper for all activities that are going on in the executive branch in Texas government. It's called the Texas Register. They have to post notice that they want to adopt, for enforcement purposes, this new version of the uniform standards. And then there need to be sign-offs. They have to they must specify which version of the code they wish to enforce. They can't say, hey, as long as something's called the Uniform Standards of Professional Appraisal Practice, we'll enforce it. It's not allowed to do that.
And Jeremy, are you saying, so you're saying, and this obviously we'll talk about this happening outside of Texas, but you're saying that Texas is chasing, it sounds like Texas is chasing the tail. On one hand, they've set themselves up to have to follow the USPAP, but they haven't adapted it legally into the system. So it's an illusion of. Yes.
Am I right here? Yes. I would call it bluff enforcement. They're the duties of, let's say, and also it's not just this appraiser licensing board. It's also the comptroller, and there are other Texas agencies, banking regulators and things that use this outside code and enforce aspects of this outside code. The Uniform Standards of Professional Appraisal Practice. By the way, it's published by a Washington, D.C. nonprofit that uses the money to expand its expand its web, its tentacles into other areas. They travel extensively, oversee the trustees and the executive director travel to Europe with the money and they go on. There's all kinds of shady activities going on with this nonprofit.
But Jeremy, are
Yeah.
you saying that the CAD, very important?
Yeah.
Every state, I believe, has one.
Right.
Are you saying that they're violating USPAP?
Yeah. Well, no, I'm saying USPAP has not been adopted in Texas. And so when let's say the Denton County CAD publishes its reappraisal plan for 2024, they'll cite USPAP. They'll say, hey, we follow USPAP, but USPAP doesn't technically exist in Texas. In the state of Texas, it doesn't officially exist because it has never been adopted through a required
procedures.
Yes,
which are designed to have safeguards to protect the taxpayers and
exactly right. Exactly right.
Oh my God! So how the hell are they coming up with value, Jeremy?
Well, that's a great question. In Denton County, from what I understand, from just having been a spectator and reporting on Mitch Wexler's many trials and tribulations, they're just simply they've come up with a number that they need to service the different districts that depend on the Central Appraisal District for their funding, school districts, special districts of different kinds, cities. And so they come up, hey, we need a total tax roll of X. So how can we get to that? And then they've used sophisticated computer wizardry to come up with, okay, we think homes in this tract need to be worth X, and homes in that tract need to be worth Y. And this commercial center needs to be worth W. And so I marvel at the computer power and the programming at this CAD's disposal that allows them to then back into those values. So the values don't reflect the actual values of the homes, which is the whole point of the mass appraisal. They affect. It's essentially they've come up with a number, not unlike what we find when bad actors have infiltrated the appraisal profession. These are people that go to their client. They say, "What number do you need me to come up with?" The client says, "You have to come up with, X or above. If you come up with below X, it's going to torpedo the deal." So this is the same thing. This is a great analogy.
So just to clarify, you're essentially saying more than likely the districts, which by the way fund like everything,
they do,
firefighters, police, school, so it's, you would think that they would have a better system versus the 1980s system that they have, but this is I'm having trouble with this because this is just such an important thing, Jeremy, and it just it doesn't appear that there's anything in place, there's any accountability, there's any transparency, there's any way for us taxpayers to fight this, because there's nothing there. And then,
well, there is. Well, Travis, every taxpayer has a right to a assessment appeal, and that's where the rubber meets the road. But that would require then, if these values are so far off, if the values are a bit off one way or the other, probably there would be very few property owners that would bother to wage a assessment appeal, find an appraiser perhaps, or a broker maybe that can help them in finding comparables and making a case. Of course, the appraiser is a third party. The appraiser is not an ethical appraiser. Will not be a hired gun for the property owner. But I know there are brokers and people who are not licensed appraisers who do this work. And they do act as hired guns. They act as advocates.
Like a BPO?
You're right. So a broker could provide a BPO, and if the BPO seems reasonable, the property owner could use that. I think, and at least in California, to go before an assessment appeals board and say, hey, you're way off here, you know?
Yeah. Well, I mean, it's way off to come up with a value. And then, as you just said, so just for the viewers, one more time,
Yeah.
what we're seeing here for math, they come up with a budget, the school districts, police district, they come up with a budget, they give it to the CADs, and the CADs back in the math, back into the value. So here's the value we need, here's the revenue we need. And through wizardry, probably, and we have testimony from people taking the data out of the system, manipulating it, putting it back in, through that type of fraud wizardry, I'll say fraud wizardry, the value is
fabrication of values, I would call it.
And there's like, and they're using law, but it's not adapted. There was never safeguards. Like, my God, what is there a way out of it? What's the way out of this, Jeremy?
Well, I think exposure is the first thing. I do a weekly press release, and that's my forte. I'm a former copy editor at the Los Angeles Daily News. I'm good at writing headlines. I'm good at writing leads and doing research. And so I think that's a really good start. I think in the state of Texas, I would say, you know, the Attorney General might be a good place to start. Now that's the executive branch. Contacting your state legislators, that would be another idea. But I think exposing it. Mitch Wexler is a driven man. He is, this is his life's work, is exposing just what the kind of alleged fraud that's been going on at the Denton County Central Appraisal District. And it's shocking. And then this has led to a whistleblower that from I think maybe Harris County or a county somewhere around Houston. And I think that starts with exposure of what's going on. These assessments they are just that. If someone comes and assesses your home, even if they've assessed your home as one home in a pool of 1,000 homes in your tract, you still have a right to an assessment that reflects an appraised value. In Texas, they're not called assessments, they're called appraisals.
Yeah. Let's tie this in. Let's tie this all together, Jeremy.
Yeah.
Now, obviously, so let's go back now. We could talk about the CADs, or we could talk about the fee appraisals, which is that origination. Probably the viewers are familiar with the fee appraisals. Can you, explain to the viewers as simply as you can, and take as long as you need to draw the line to Freddie Mac, Fannie Mae, HUD. But can you explain to the viewers how actually, these municipalities and these CADs, HUD even, they're killing us, man. They're killing us because ultimately, if this doesn't work, which it's not working, we know that, we're trying to sound the alarm. Ultimately, that burden falls on the taxpayer because the taxpayer is a silent partner of all of this. So, Jeremy, how is the taxpayer on the hook here?
Okay. So prior to the 2007-2008 financial crisis, it was only implicit, really, that Fannie and Freddie, the mortgage giants, they're neither federal agencies nor are they typical privately owned or publicly traded companies. They're something in between. They're quasi-governmental, and that's a very scary place to be. If you're to have any organization, if you're a taxpayer. So when a commission broker, for the seller, commission broker for the buyer, the seller, when they have this negotiation, they agree on a sale price, there's this hidden party in the room, and that is the U.S. government, and by extension, the taxpayer. And since the 2007-2008 financial crisis, we now know that Freddie and Fannie are too big to fail. They received, and individually, they received the largest bailouts in the crisis, almost $200 billion combined. And so essentially, the housing lobby has always tried to capture Freddie and Fannie. And its regulator, the FHFA, Federal Housing Finance Administration, I believe it stands for, the FHFA. And they've also tried to capture HUD, which controls the FHA, another powerful guarantor, government guarantor of mortgages, and have them essentially do their bidding. And they do this by offering lucrative, the prospects of lucrative jobs for government workers and revolving door situations, and through lobbying, through developing close relationships with government regulators. And so Freddie, Fannie, or I should say the housing lobby wants nothing more than to see appraisers sidelined. And this is happening. They're getting their wish. And some of the money that's being used to prosecute appraisers for doing nothing other than their job, occasionally coming in low, and then a borrower feeling that he or she can leverage the situation, file a complaint with HUD, possibly go after the appraiser's errors and omissions insurer, or shake down the appraiser in some way. It's had an effect. It's had an effect on values. Appraisers, and for good reason, are scared to death of flirting in that area that might make the transaction fail.
Well, Jeremy, I mean, it sounds like from what you're saying, the system has turned this entire process into basically they've turned appraisers into minimum wage employees of the AMCs. And anytime that an appraiser doesn't conform to the pressures of higher value, they get blacklisted. They're now the redheaded slips. So how does
I'll give you a great example. I'll give you a great example. In my state, California, the Bureau of Real Estate Appraisers and working with a legislator, a bill was passed that broadly broadens the definition of a protected class. So it essentially it involves any gender, your status as a veteran, whether if you're a woman and you're breastfeeding, any religion, so essentially they've included
if the value's low, then I've automatically
right. There is no they've created this definition of protected classes that is so broad as to include everyone, including myself. And so why would you not, if you thought that you could arm twist a non-bank lender into approving your loan, or you felt you could shake down the appraiser's insurance company, or you just wanted to make a statement, or you wanted to, maybe you hope to file a complaint and then become famous and get a reporter or a local newspaper to write about your situation. You're going to do it. Why would you not do it? Especially if there have been cases where appraisers have been there've been complaints filed against appraisers for no, we believed, based on hunches, we believe the appraiser was a bigot. We believe the appraiser saw some indication that saw a Black Lives Matter poster, or some indication, or the rainbow flag or something. It's so broad in California that essentially everyone can file a complaint against an appraiser, and then this appraiser will spend maybe a year on some, or more if it's on the federal level, protecting his or her good name.
Yeah, with their minimum wage salary. Geez, let me just a couple things real quick to reiterate to the view. My God, man, I mean, you've changed my soul. I mean, I'm so frustrated that the situation is even here. But last time around, just to the viewers, the taxpayers bailed out Fannie Mae, Freddie Mac for the around about $200 billion. Now, fast forward to today, if they're going to take a bailout from us, well, it's not from us anymore. We've already paid as much money as we can make. It's our children's unborn children that will be paying this back, is what he's saying. And here's the thing, and I want to round us out. But first, Jeremy, can you please go into the bonds and how bonds are actually in jeopardy from all of this overvaluation?
Well, this is not my area of expertise, but I can tell you a lot of these bonds consist of mortgage-backed securities that are secured or collateralized by mortgage-backed securities, or CDOs, collateral debt obligations. During the lead up to the great financial crisis, there were synthetic bonds and there were derivative bonds. And I think we're seeing this start to occur. These exotic instruments are starting to occur again, and they're winding up. They're winding up in pension funds, and a lot of these pension funds, if the pension fund cannot service the pensioners that it's tasked with, it's the taxpayer, it's local taxpayers in some cases that are bailing out the firefighters' pension fund or the teachers' pension fund or what have you. If it's a public, if these pension funds serve public workers, the taxpayer is on the hook to make up any difference if there are shortfalls. It's very dangerous, and I think there's all kinds of risk floating around in these bonds that people would be interested to know about.
Right. I mean, is this a fair statement to say, Jeremy, the entire value system is broken and failed to protect the American consumer? Can we say that about the appraisal process?
I would say that. I would agree with you there, and I would raise you. I would say that nothing becomes more expensive than when the government sets up a program to make it cheaper.
Okay, well then what's the difference between what's going on right now compared to the great financial crisis? Then what's the difference here?
I don't know, 10 years, 15 years.
That's it? Then there's no,
Yeah.
So can you, all right, let's end out here. Now you've wrote some pretty impressive books. Obviously you're a writer, very impressive, Jeremy.
Thanks.
But can you, yeah, of course, man. Can you talk about, maybe if you can pull maybe 2 or 3 things that are at the top of your mind that are your biggest worry about what's going on right now that we can use to compare what happened during the GFC. So what are like the top maybe 2, 3 similarities you see right now versus what you saw when we had the collapse?
Okay, so in the lead up to the collapse, the concept of DEI, particularly the concept of inclusion and equity, weren't on anyone's radar. Now there's a very scary element that is being inserted into the attacks on appraisers. And these attacks, appraisers have been dealing with these lobbies for a long time. This is nothing new. The non-bank lenders, fintechs, particularly the non-bank lenders, but also the banks, the home builders and realtors have always felt like appraisers were an impediment. They wanted a faster transaction velocity, because remember, the faster they can originate loans, the faster they can sell those loans to having them either guaranteed and then sold, or else sold directly to Freddie and Fannie. They get the money back and they can parlay that into more loans being originated. So the appraisers have always been a sticking point, but the introduction of equity, of the concepts of equity, which I think we can define as a noble effort to try to erase the racial wealth gap in America, noble effort, just completely badly applied and executed, and diversity, also a noble effort on its face. These now have been plugged in government agencies that now have a mandate to look for these things. And it's scaring the wits out of appraisers. And I think it is affecting values. Appraisers are way more hesitant to say, hey, no, this value is not supported. It's not supported in the market. And instead, they might just say, yeah, okay, rubber stamp it. And then that transaction, that rubber stamped appraisal, and that transaction then becomes a data point in someone else's appraisal 2 weeks later, or a month later, or 6 months later.
I mean, you're just hitting me in the face with just like truth bombs. And for the viewers, I just to kind of maybe articulate this a little differently. Back during the GFC, when I was a loan officer, I could legally, it was not against law, I could just keep calling appraisers like next until I found an appraiser that would say, okay, Travis, I give you 200,000. Do y'all see the problem with that fraud? Do y'all see why we got in so much issue back in the day? And what Jeremy's trying to explain to us is those attacks and manipulation on appraisers are not only existing today, that they could be even worse than the GFC, because the pressure is no longer necessarily only coming from the sales agents. The main pressure is actually coming from the regulators and agencies in the industry. Wow. Absolutely insane, Jeremy. We've been talking for almost 50 minutes. A lot of overwhelming information here. I had a lot of preconceived notions about how we should get away with appraisals. Now I'm like, stupid Travis, I fell for that narrative. Jeremy, can you just, I want to give you the last words. Is there anything you want to clean up? Maybe we didn't talk about, or would you like to end this a certain way?
Well, I'd just like to point out once again that in the state of Texas, this little Texas agency, a state agency, has gone rogue, and it's enforcing a set of private standards on appraisers in open violation of Texas state law. And you could say maybe they believe that their mission is so important in protecting and safeguarding opinions of value in the state of Texas that they themselves are required to violate the law. That is no way to run a public agency, and that needs to be challenged by the very next appraiser who is disciplined to question, why can you show me could you show me how this private set of standards has been correctly adopted into Texas law? It's ripe for a legal challenge.
Do you support the notion that that there's powers in numbers, that we should unify to make change?
Yes, look at this situation, and if you see what's going on at the Denton County Central Appraisal District, sign Mitch's petition, but make sure you understand what's going on. That's the main thing. It starts with shining a powerful spotlight on what's going on there.
Yeah, awareness. So other than that, Jeremy, I mean, first of all, I need to go sit in a corner for 8 hours.
You need to take some Xanax.
Bro, my God, I got my head is just firing on all cylinders right now. I'm just like, I'm shocked at how blinded I've been this whole time as a consumer, thinking.
Yeah. I'm telling you, I started researching these shortfalls in the regulatory system for appraisers back around 2020, and it's been very depressing to see how many states, California, Washington State, Texas, South Carolina, Nevada to a certain extent, Arkansas, and these are just the ones that I've researched, are in open violation of their respective administrative procedure statutes. It's shocking. There's some states like Kentucky, Maine, Michigan, Florida, I believe Florida, that seem to be, from what I could tell, seem to be in compliance with their state laws regarding how they're enforcing this continually changing set of private standards. But Texas is definitely a scofflaw.
I bet you, Jeremy, and I don't know for sure, but this is what I've been learning this whole time. I bet you some of those states, when we go under the hood, I bet you it's the same crap, man. I bet you it's the same fraud. I bet you they're trying to, like you were saying, back in to a value needed to support the system. Now, other than that, Jeremy, I'm going to have, once again, guys, to the viewers, don't forget to comment below. I'll have all of Jeremy's information in the description. If you guys, and I have a few appraisers watching this, Jeremy, if you guys want to stay up to date about Jeremy's fight with appraisers, if you want to follow him to kind of just get enlightened, what's going on with Fannie Mae, Freddie Mac, HUD, and all of this debauchery, follow his information, send this man some love. And don't forget, guys, comment below and let us both know what you learned and what value you got from this video, because that is the most important thing about listening to this. Now, other than that, guys, if you're out there investing in real estate, you already know we wish you luck and we hope you win.